And so we're looking at adding probably a minimum of $900 once gold breaks 3,440, which is not too far above the current level. Once it breaks up above that, we could run another $900 to 4,400-ish, let's say, in a similar space of time that the move in took, which takes us to that level at the end of this year. I think Powell is in a very difficult position. Obviously, the jobs report that came out, I mean, it's slightly ironic that it's the one thing, perhaps, which Trump would have wanted to persuade Powell that he should cut rates, and he goes and sacks the chief statistician. I mean, talk about shooting the messenger. It's, this is crazy, absolutely crazy. But it is essentially become very, very political. I think if I was in Powell's shoes, I would be worried about signs of inflation. If you look at what's been happening to metal prices, oil prices, agricultural prices, they're not going lower. If anything, they're tending to drift higher, measured in dollars. And that is even before there's any real impact from all this messing around with tariffs. And I just think that, if I was in Powell's position, I would not cut interest rates. But I think those job figures actually makes that policy almost untenable. Again, if I was in his shoes, I'd probably go a quarter-point cut. And then in the script, if you like, the post-cut FOMC script, I would express all my concerns about inflation and all the rest of it, and just get the message over that it's okay, it's a quarter point now, but that's it for the foreseeable future. So I think that's what we're going to get. As to how gold is behaving, I think, Kai, we have to appreciate that, we're in this sort of summer lull. I mean, people are on the beaches or they're with their kids who are on holiday or whatever. This always happens, actually, every summer. And talking to other, sort of friends, if you like, in the Substack community, they tell me that, things quieten down in the summer, which I think actually says it all. So nobody's really sitting there and thinking too hard about the implications of what's going on. I guess that in the coming weeks, I mean, particularly in early September, this is what usually happens. In early September, people return from their holidays, investment managers begin to have the committee meetings and all the rest of it. And, the investment strategists in these big firms, start considering the position seriously. And then you find that investment decisions begin to be taken. Ahead of that, I would expect to see things begin to discount what's likely to happen, if you like, in that sense. And on that basis, I would expect gold to move higher. I don't think I would tie gold in too closely with the interest rate story, other than a cut in interest rates is obviously good for gold because it undermines the pricing power of the dollar. Because what we're looking at is not gold going up so much, we're looking at the dollar going down. And there's no doubt, if you look at the dollar's trade weighted index on the chart, it's a pretty bearish scene. So I think it's really how the dollar behaves, if you like, over this that's going to determine the outlook for gold. And as far as the investment strategists are concerned, when they start to look at this, worries of stagflation, I think, are going to mount and mount and mount. And, so in other words, you're going to get the job losses. I mean, we've known, for goodness sake, we've known that the US economy is not growing. I mean, if you take out the budget deficit out of GDP, you end up with the private sector, plus obviously government spending, but funded government spending, actually contracting. And it's been like that for the last couple of years. So there's no way the US economy has been growing. And I just don't see that change. It is obviously geopolitical because if nothing else, central banks have been accumulating it. They have, in effect, they've been selling dollars and getting into real money. So yeah, it is geopolitical. We know, or at least I know, we don't have official confirmation, but I think it's generally accepted that the Chinese and also the Russians have a lot more gold than they say they have. They can go onto a gold standard to protect their own currencies from the end of the fiat currency era. So, yeah, I mean, I think this is the background for gold. I mean, looking at it, gold has risen more than quite a lot of the things that you would expect to rise over time with it. I did an analysis a little while ago of pricing base metals in gold, and I found that from the prices in the year 1900, so we're going back 125 years, gold is now less than 20%, sorry, not gold, base metals, a basket of base metals is now less than 20% of the values at that time. Now, the reason I say this is that we do know over long periods of time that the purchasing power of gold is stable. So in other words, while we can't say that, you know, a 80% discount, if you like, in terms of value is an accurate measure of anything, what we can say is that gold is ahead of the game relative to precious metals, and I suspect that's also the case with other commodities. I think this tells us two things. It tells us that a lot of commodities have been left behind, and I would expect to see commodity prices measured in fiat currencies and also gold tending to rise over the next 4 or 5 years, if only to protect the banking system. So, you know, with that sort of trouble in store, yeah, I can see gold going up to $4,500 quite easily by the end of this year. But I mean, it is reliant on those things developing. But, you know, any financial historian can see the prospects of that developing if they really look for it. And again, I go back to 1929, credit bubble plus Smoot-Hawley Tariff Act, Mark II this time. And, you know, Trump's tariffs are even more destabilizing than Smoot-Hawley was by a long chalk. Confident. The Russians can do too. And I'm sure the Russians have already considered doing this. But, you know, the Chinese have probably encouraged Putin to stay his hand on this issue. So, you know, it's a situation really where so long as governments and central banks can print money, you know, ad infinitum, then they're going to continue to do it until they have to face the reality. So China making that announcement, I think, would be the first step towards a reality. But I mean, they're moving in that direction already because the Shanghai Gold Exchange is opening vaults in Hong Kong and also Saudi Arabia. And I'm sure there will be other vaults, you know, around, particularly around the Far Eastern region. I mean, I would expect to see them in Thailand. I would expect to see them in Indonesia, Malaysia, maybe Singapore as well. Yeah, you know, that region is going to go on a gold standard, I think, without a doubt. It's just a question of when. It's all part of protecting yourself from the follies of the West, and particularly the aggressive follies of America, which weaponized its dollars. Big mistake.
Just to take that one step further, Alasdair, would that automatically make it the next world reserve currency if they put it on the gold standard? I
think it's quite likely. I think that's the way it's going to go because you know, the story at the moment, as far as BRICS is concerned, and also the Shanghai Cooperation Organization, is that settlement will be occurring in their own currencies. Now, I think that their own currencies, I mean, you know, it's a question of individual trade agreements. You know, if you're importing, say, copper from Indonesia into China, that's easy enough. You take Chinese yuan. But if you're selling copper into Pakistan, do you want to take their currency? I think the answer is probably you will agree to take Chinese yuan. You know, so I think that's the way it's going to work. And then, having effectively rejected you know, the weaker fiat currencies, I think what then happens is that the yuan becomes, if you like, the replacement for the dollar, and they will need to secure the purchasing power of the yuan in order for it to replace the dollar. But they're not going to do that before they really have to, because to do that before they really have to, I mean, that could end up, particularly with this administration in America, it could end up World War III easily, because it's so destructive of America.